We have our first management joining in. Forgings is the first company on the radar. Now, the company for many quarters has been reporting a sluggish set of numbers. Q4 was also quite weak. In fact, they've barely seen a single-digit growth. And by the end of FY24, they haven't even managed to meet their lowered guidance for the full year. The guidance was 1,600 crore rupees, and they have barely managed to just, ended below that. Vidyashankar Krishnan, the chairman and managing director at Forgings, is joining in to talk more about that. Mr. Krishnan, thanks a lot for joining in. I want to first start by asking you, how is the situation on the ground? Are you seeing any improvement at all? And, you have lowered your guidance to 1,600 crores, but you could barely meet that as well in FY24. So what is the outlook for FY25? What kind of growth are you looking at? When do you expect to see a recovery?
Good morning, and thanks for having me on your show.
Sure.
We have almost touched our lower guidance number. The reason for slightly falling short was probably a very weak CV market in Q4 of FY24. The CV market almost went silent during that period. So as a result of that, we saw weaker numbers. Otherwise, I think we could have easily crossed the guidance that we had given.
So, you ended with about 1,550 crores in FY24, which is a growth of about 9%. Are we looking at double-digit growth in FY25? Is that a reasonable assumption? And have you seen any pickup at all in the CV market in Q1?
Yeah, we have seen a significant pickup in the CV market, though not as high, but compared to Q1 standards, Q1 for the CV market has been reasonably strong. The reason is bus orders have been coming in to CV makers quite strongly. So that's been driving up the market. Yes, this year we do see us knocking on the doors of 1,800 crores, which should be a growth in the region of around 15%.
Okay, all right. Hi, sir. Good morning and good to see you. When you're sure about this 1,800 crores, right? Because the street gets a little bit skeptical. They say things are volatile. So the management should be a little bit more cautious when guiding. 1,800 crores is doable, you're sure?
Nigel, everything depends upon broader economic fundamentals. So any performance is subject to market conditions. And that cannot be overridden by any management.
I agree. I agree, sir. But, evaluations have been in your favor. You have the capacity as well. So scaling up of these revenues are going to be important. Be that as it may, give us a couple of numbers. What volumes are you factoring in for this year? I think last year you were getting for around 85,000 tons. So what did you end up with? And what are you factoring in terms of a volume uptake? And more importantly, margins. You've been telling us that machining is something that you're focusing on. That's what's going to help your margins. Is there further scope to increase margins from around this 20% that you've already delivered?
Yeah, few questions. So let me go about it one by one. First is we see margins upwards of 20%. I had said earlier that we would be looking at that by Q3 of this financial year. We are on target. If you see from last year to now, we've gone knocking on the doors of 20% almost. We're at 19.4%. And I would expect margins to improve in the next 3 quarters. That's number one. On the back of products that we've been developing, we do see growth coming in from the domestic market as well as global customers, where we have bagged a couple of new customers, particularly in the EV space. So all that augurs well for the organization.
Okay, but you didn't give us the numbers on volumes.
Yeah, sorry. Last year we had said that we would achieve about 85,000 tons. We produced 84,800 odd tons. So almost, touching the mark. This year, we expect to cross 95,000 tons.
Okay,
sales stood at about 77,000 tons, and that would be going up by about 10 to 15% this year.
Okay. Actually, your body language, your guidance has picked up a lot compared to when we chatted last time. So it's good to see that there is a recovery in the market and it may translate to your numbers. So you said margins upward of 20% and you expect the margins to improve in the next 3 quarters. How much can it improve to in the near to medium term? I ask you because, I've asked you this question before as well. Some of your peers, like say a Happy Forgings, trades with margins of 28, 29%. So is there scope to get above the 25% mark now that things have recovered?
25 is a bit of a stretch. We have to walk the talk. We said that we would go beyond the 20% mark in this year. and that would be where I would so far stick to. And thereafter, we have to go about it step by step. Yes, we are
Okay.
very much in the job.
All right. Also, earlier you had guided for 2,000 crores revenues from the EV business by 2030. Are you on track to do that? And in the very near term, to FY25, 26, what kind of scope do you see in EVs?
Yeah, our subsidiary Abhinava Rizal has yet to take off the mark in terms of sales. We are still at a development stage. Of course, we are handling several customers very closely, and we expect to bag a few customers in the next few weeks and start our sales journey. Once we start, I think we have a lot of potential. As I said earlier, we're one of the rare companies in India who can design motors from 3 kilowatt to 300 kilowatt, and there are not many who can make that claim.
Okay. All right, sir. We'll leave it on that note for this conversation. Thank you very much for joining in, and good luck. And, hopefully this time around, you will be meeting all of those expectations that you've laid out. Thanks very much.